Hi everyone, this is Anna Eckstein with Naples Ultimate Selling Team in Southwest Florida. And today we have another market update. We will be talking about real estate bubble, and also forbearance and second quarter local real estate market report. Stay tuned. All right, so today I would like to start with a quote. It says, when you have a void of information, emotion tends to drive decision-making. So I think there's a lot of misinformation in today's market about, do we have a bubble, about the home appreciation? Are we going back to 2005 and 2006, 2007 crisis? So if you look in year over year, price appreciation percentage are accelerating. From the January 21st, you can see that it's been going in 10%, 13%, 15%. So the question is, how much is too much? Is 20% is too much? So do we have a housing bubble with risky loans? A lot of consumers in this market just wondering, are we going back to those mortgages? And we have another from the chief economist, CoreLogic. It says there are marked difference in today's run up in prices compared to 2005, which was a bubble fueled by risky loans and lenient underwriting. Today, loans with high risk future are absent, and the mortgage underwriting is frigid. So we can compare, for another slide, actually the difference between 2006 of mortgage origination with FICO score of 620 and below. And you can see that 376 billion was actually in 2006, and in 2020, it's 74 billion. So obviously you can see a huge difference in mortgage regulations those 2 years. So there's outsized increase have raised concerns. The home price bubble is emerging. However, the conditions today are quite different than in early 2000s, particularly in terms of credit availability. The current climbs in house prices instead reflect strong demand amid tight supply, help alone by recovering low interest rates. And this was a study done in Harvard University. So you can also see the historical data for the mortgage credit availability index, and you can see huge difference in 2007 compared to today, the index availability. So the housing bubble, mortgage debt, and affordability. So the housing bubble, you can actually see that household debt service ratio of mortgages as a percentage of disposable personal income. Now, disposable personal income, that's your income after you pay your taxes. And you can see that it's actually the lowest since 1980s. And today is 3.45. And you can see where we had a housing bubble in 2007, it was at 7.21. So we're in really good shape there. So looking back at the bubble years, house prices exceeded house buying power in 2006 nationally. But today, house buying power is nearly twice as high as a median sales price nationally. Many find it's hard to believe, but housing is actually undervalued in most markets. And the gap between housing buying power and the sales price indicates there's the room for future housing price growth in the months to come. And this is from the Mark Fleming, the first American chief economist. So let's take a look at the house affordability index since 1990 to today. And you can see that the house affordability was actually not as afforded. Let's say if we're talking about 3 years ago, right? If you're talking about back to 2006 and 5, so you can see our affordability that maybe it's not as affordable back, in 2010, 2011. It's less affordable, right? But is way more affordable than back in 2006 and 2007. You can see this on a graph. So the higher number is the higher affordability rate. So the affordability continues to decrease. You can see from January, the chart going down. Also, so do we have a bubble? Most of the economists, most of the they said no, absolutely not. We don't have the issue because the main driver of housing shortfall has been the long-term decline in the construction for single-family homes. And I did cover this one of my videos. If you like, I can link below the video that we're talking about deficits of the new construction homes. But also on this chart is we can see single family home housing unit completed. And you can see that from 2000, so for the 13 consecutive years, we see the below 50-year average of the new home being constructed. And also, let's talk about forbearance. So we talk about as well, I've been periodically making videos about forbearance and the updates. So this is to be the newest update that is available up there about the forbearance. So originally, the prediction were that 30% of the all mortgages will go into the forbearance. And that projection actually didn't really make it because we only had 8.47% in the top May of 2020. All the mortgages in the United States went into the forbearance. And today you can see the numbers decrease. Actually, it's to 3.5. So also the number of mortgages. Now, as of July, we have a 1.86 million mortgages in a forbearance. And you can see we started back in May at 4.76. So we definitely go in the right direction. And this is chart I already introduced several times in my past videos. And you can see that this is, if you take the mortgages that went to the forbearance plan, you can see the 44% were paid in full, 38.7 in blue. They reached some sort of repayment plan, if that modification or loan deferral, and that blue continue to grow. So we still have 15.7%. There's no loss mitigation plan being developed with the lender. So, and this is the data is accurate as of July 11, 2021. So between 2006 and 2014, about 9.3 million households went through the foreclosure, gave up their home to a lender, sold in a distress sale. So what are we looking now? I mean, there's different numbers, but the expert says it's about 300,000 mortgages that may go into foreclosure. And of course, we don't want any would go and hopefully they will work out. But think about guys like this, that even those homes that may go to foreclosure just because of the deficit of the market, that we are in, there's lack of inventory. So those homes will be bought fairly quickly, if they go into foreclosure. And most of the homeowners today, they do have at least 10% equity for most parts. So, and of course, you can hear probably on the news all kinds of headlines, the housing bubble officially is over, and the pending home sale drop in June. So let's talk about the buyer traffic, and you can definitely see in most part of the country. This is back in 2021 April, the buyer traffic, and then compared to the May, you can start see light blue coming through the map. So you definitely start seeing, and June obviously shows that as well. And you can see that because maybe sometimes buyers say, well, I'm overpaying for the home, so there's, and you can see actually this on the entire map. So you can see that buyer traffic demand is definitely a little bit down. I mean, if that's seasonal, is that, some parts of the country, but it's still definitely, this is the monthly index that you can see on a showing time. And you can still see that, this is the May 21 house appreciation, and you can see that this is throughout the country, that Federal Housing Financing Agency says it's appreciated 18%, 15.4%, CarLogic, and 16.6%. You can see that as well. And maybe the buyers start asking themselves, I'm overpaying of the home because no one, don't want to buy a home, and then a year and now later they cannot sell the home for, because the house is in a market. So even the sales activities are coming down. We may be seeing some turn in the market. We are seeing less prevalence of multiple offers. It is still a seller's market. There's no doubt about. Still the seller's market. The people need to be very cautious how they price their home to attract buyers, knowing that the sales activities are declining somewhat. And you can see, this is the chart of you can definitely see that we're still in the seller's market. There's no doubt about, and we will talk about our second quarter shortly. So the broad level of home pricing are in no danger of declining due to the tight inventory conditions. But I do expect the prices to appreciate at a slower pace by the end of the year. Ideally, the cost of the home would rise roughly in line with income growth, which is likely to happen in 2022, as more listings and new construction become available. So this is from the chief economist, NAR. All right, so let's talk about our local market, and we will compare 2 quarters. So it will be second quarter 2020 versus 2021. And you can see we can compare in 4 different cities, Naples, Bonita Springs, the next one goes Estero, unfortunately I'm missing, and the Marco Island is the last on the right. And you can see this is the new listings that actually came on the market in the months of April, May, and June. And you can see that, they quite steady go through the list. This is the homes that were for sale in those 3 months, again, between those 4 different cities. And you can see that our, the homes for sale is quite lower compared to the 2020 by a huge percentage. I mean, you can see across the board between 40% down on our homes for sale that months, the available homes for sale that months to up to 75%. And this is the month supply. You can also see them. And again, I'm comparing right now single family homes. We'll get back to the condo shortly. So the single family homes, we are completely down on our monthly supply on the market. It's how long the home will be for sale on the market until, goes pending. And you can see that we are really, our inventory down to 65 to 80%, over 80% compared to the 2020. The pending home sales, single family homes for the 20 and 2021. You can also see we are up by 127%. This is the homes that are going in under contract, could be active as contingency, could be pending. So all the pending homes, this is reflecting, you can see for single family homes. The total sales, again, for the single family homes, we can compare, and they're all up compared to the 2020, 2021. And you can see some of the instances, they are up by 180%, like, oh my gosh, in Marco Island, you can see, again, doesn't show. So the Marco Island was up to 180% on single family homes. Now also we look in the new listings for the condo, and you can see they're all up again. Well, in June, actually, it was a little bit down, but the numbers is up there. It's just interesting to compare 3 years in this pandemic, 2 years in this pandemic situation. And so this is the numbers for a condo new listings, and homes for sale for the condos. Those homes that for sale, obviously, in the months, we totally lost, like, all by 80 up to some 80% our inventory. And also the month supply for the condo, we also lost by 88%, 89%. So we definitely lost all our inventory, and hopefully we will start recovering them soon. The pending sales that we looking for a condo, we again up to some crazy numbers, up to 237% in the Naples area in the month of April. And Marco, again, 269% in Marco Island. It's just really, that's the homes that went under contract. So you can see some definitely, the buyer activities that you actually have seen in second quarter. And the total sales for the condominiums, again, in Southwest Florida market. And again, on the right is the Marco Island. And you can see the Marco Island, it was up, oh my gosh, 309% compared to the 2020. Estero will be just the next one in line, and Bonita and Naples, it's already, you can see them as well. So we definitely have a very strong market for the second quarter, continuously still to be very strong. We do need more inventory, and I think hopefully, the second quarter of the 2021 will be giving us additional inventory that we all needed. And if you on the market and you're looking to buy or you're looking to sell, if you have any questions, if there's anything I can do to help, I would love to work with you and your family. So this is again, thank you so much for listening to this market update. And my name Anna Eckstein with MVP Realty, and my phone number 239-249-4476. Thanks so much again for listening. Bye-bye.